Hey there investors, in this video we'll be looking at the iShares Russell 2000 ETF. The ticker symbol for iShares Russell 2000 ETF is IWM. And the reason we'll be looking at IWM is because of unusual option activity. We look at unusual option activity because we want to follow the smart money. And the smart money is made up of large, sophisticated institutional investors with buying power in the millions. These are investors who are either buying large volumes of call option contracts or large volume of put option contracts, thinking that the price of a stock is going to go up or down in either direction. And this is what we define as unusual option activity. The great thing about options is that they give us a time frame, which is the expiration date of the contracts, and they also give us a strike price, which is where they think the stock price is going to move. And as investors, we can try to take advantage of all of that information by following the smart money trades or taking a more conservative position to try to make a return on our investment. And remember, these videos are for entertainment purposes only. Please check out the disclaimer in the description below, as well as other information covered in this video. And don't forget to like and subscribe to the channel. So with that, let's go right into the details of IWM. So this one was brought up by the subscription that I had brought up in previous videos related to market rebellion, and these are option traders which typically recommend trade ideas about once or twice every week. And the idea for this week that they recommended was the iShares Russell 2000 ETF. So let's take a look at why they're recommending the iShares and what's sort of driving the sentiment for what is behind the unusual option activity for the IWM Russell's 2000. So in this forum, they typically break down some of the reasons why or what is driving the trade idea. And you can see here from the paragraph that they wrote, this is mostly driven because of the volatility that we're seeing in the markets. And that's driven by a lot of different reasons, right? They're noting volatility in the VIX, which measures, you could say, the fear within the market, like an index of the fear, the sentiment in the market. And they're also attributing the volatility to some of the political news of various kinds, as well as some of the macro volatility and profit taking that's been continuing to intensify. So a lot of these big hedge funds are taking profits now that the year is coming to an end and for tax purposes and etc. So with that being said, they're really looking at this ETF as a more conservative approach to playing the option trades because ETFs aren't as volatile as you would see other stocks being. For example, like a Tesla with an implied volatility of more than 100%. And when you compare that to an ETF, the implied volatility is probably in the lower range, which is a more conservative approach because implied volatility typically measures the direction and the momentum in which a stock is going to go. So the higher the implied volatility, the more dramatic the increase or decrease in that stock price of a certain stock is going to be. So let's take a look at what unusual option activity is telling us and what is sort of the sentiment that investors are getting about the market and I guess this ETF in particular. And when we go back to our bar chart here of most active ETF options, we click on this ETF tab here to see just the ETFs. You can see, kind of right away that investors are kind of bearish in the market because of what's going on. Coronavirus variant breaking out, potential more lockdowns, political news, and etc. Right? So you can see that the put to call ratio is a lot more higher than we're used to seeing. So you can see, wow, this is a huge put to call ratio on the Russell 2000, right? So overall, it seems that the sentiment is a little bit bearish because of what's going on, and you can see that in some of the sell-off that's taken place. And the Russell, which tracks some of the small cap stocks in the stock market, hasn't been immune to that sell-off as well. So with that being said, let's take a look at what position investors are taking when it comes to some of these options around this specific ETF. So when we look at the expiration date of January 8th, we can see that there's not that many call contracts up here in the call side. But when we go to the puts, you can see that the volume almost doubles, right? And you can also see that here in the total volume call or put open interest, like way double plus that of what's in the calls. And you can see when we look at the puts, investors are really thinking the IWM is going to fall somewhere around this range, right? 190 to 195 and more conservative. So, I mean, you can see this position right here itself. That's a pretty big position of strike price of 190. So investors are thinking that the IWM could fall to 190. It's currently trading at 194. And the reason because of that, which is one of the reasons that they cite in the forum, is that a lot of the ETFs and I guess stocks in general are trading roughly around their 20-day moving average, which you can see here they know could lead to technical reaction in the form of a breakdown or support that produces a bounce to the upside. So based on the market sentiment, whether we're in a bearish market tomorrow or a bullish market, this could result in a direction in either way. So that's why in their trade idea for the week, they're really putting out a thought for both trading it in the bullish market and in the bearish market. So that right there is sort of a summary of what's going on. We can see as well some of the technical analysis that they're performing. And remember, we looked at the option chain and we saw that investors are roughly thinking the IWM could go down to a low of 190. And so to determine whether or not that's possible, we want to do some technical analysis. And in this forum, they typically do that for us, which is super helpful. You can see the stock here in red closed out 193.5, and then the 20-day simple moving average which they're noting is roughly right there around 193.90. So you can see here that if the market is bullish, we can climb back up to these target levels of resistance, and if it's bearish, we could see these lows down here, right, which could easily bring us down to those 190 levels that investors are betting on in the option contracts. So that is what we're seeing as far as stock movement, which seems like it's possible that the stock or this ETF could reach either of these levels. And with the market sentiment that's going on currently, it's probable that we would see, or it's more likely, I guess, that we would see the downside more than the upside. So definitely could be a two-way trade, and you want to be able to see how the market is trending tomorrow when we open. So with that being said, let's look at what position they're suggesting for this trade, for this week's trade idea. And when we look at our trade idea summary here, which I simply put together based on the trade idea details that they had here, and the target levels of support and resistance that they note here, as well as our call stop and put stop. So the trade idea that they're recommending is buying the January 8, 2021 contracts with a strike price of 194, roughly, buying those at 305 with the stock above that 20 simple moving average. So if the ETF is trading above this, then the momentum is in our favor, and we would want to get in with an entry point with a stock or ETF above that amount there. And then on the upside, we can see that target levels they're noting are these in the white lines here. So 196, 125, 197.46, and 199.16. And you can see those there as well. So those would be levels where we would take profits should the ETF climb to those levels, and we would close our contracts at those levels. Now our call stop loss would be with the stock coming back down below the 20 moving average, the 20-day moving average, which would be 193. So if the stock comes down below, we close the contracts, stop any losses, and if conditions turn bearish, we would get on the put side by getting into the January 8th expiration with a strike price of 193, roughly trading for $2.85 per contract. And our entry point there would be with the stock or the ETF below that 20-day moving average of 193.90, which we know, or they noted through their technical analysis here. And the 20-day moving average being this yellow orangey line here, roughly. And so our levels of support, or levels that we would take profits at, would be the levels as follows, which they also note down here in the white lines. And those levels are 191.80, 189.94, 188.24, and 184.35. And then should our put position turn bullish, then we would close the contracts and stop any losses on our puts with the ETF or stock trading back up to the 193.90. And that is the idea for the week. Let me know what you guys think about the trade. I'd like to hear your thoughts on it, and also your thoughts on what's going on with the market and what you guys think is going to happen. Thanks again for watching. Stay tuned for more videos. Please remember to like and subscribe as well. Thank you guys.